We are just, well, about 5 minutes away now from the closing bell. After a three-day weekend, the market's seen yet another day of records. It goes on and on and on. But is it sustainable? We ask that every week. What is the true strength behind this rally? Well, let's bring in Pacer ETFs President Sean O'Hara. We called him Sean Pacer going in the last segment. We apologize for that, Sean. It's Sean O'Hara. Thank you, regardless, for being here, Sean. Okay, the question we ask everybody, how long can this rally go on? And a lot of people just say, well, really, there's not a lot of downside as long as President Trump can deliver his promises.
Well, that's the whole story. The market loves the Trump message. They love what the president is doing. They love his plans going forward. They like tax reform, regulatory reform, energy independence, repeal and replace Obamacare. Everything that he's talking about, the market loves and is pricing in. The real proof, if you will, in the pudding will come with whether or not he can actually get what he wants to get implemented and how much of it. So I don't know that anybody knows exactly how much of this run-up you would attribute to what he's been talking about. We'll see what happens at the end when we ultimately see the real results.
Well, where are you telling your clients to put their money in this environment?
Well, you know, there's a great party going on, right? So when there's a great party going on, nobody wants to leave. And so what we do at Pacer ETFs is a couple of things. If you're going to be at a great party, it doesn't mean you need to be the guy running around with a lampshade on his head. What we would say is stay closer to the door and be ready in case something bad happens. So we have a series of ETFs that use trend following called Trend Pilots, large cap, mid cap, NASDAQ 100, which has been an unbelievable tear with some downside protection. And then we have a series of cash cow indexes. We focus on free cash flow yield. And you get names like Apple, Walmart, IBM, huge free cash flow yield trading at a big discount. The market's expensive right now on a relative basis, but you can buy something like cows or GCow and pay 15, 16 times earnings instead of 22. It's much better to do that this late in the game than it is to overpay for future earnings. If we get disappointments on the future earnings, those higher multiple stocks are going to hurt you. If we get some upside, we actually get real legislative impact here, then those trading at a discount might actually get a bigger lift.
But, you know, there's a lot of sentiment and emotion as part of this rally, I think, and the sense of optimism, Sean. Do you think that's well-based? I mean, it just seems that business optimism, consumer optimism, housing market slowly turning around, it's all pointing in the right direction.
Well, you know, optimism begets more optimism. One thing I will say, though, is an old sage once told me, bull markets always end in euphoria, not in pessimism. So always be ready. But the market seems on a tear. I was listening to something on the radio on the way down here. I was listening to Rush Limbaugh, and he said something which is right, which is obviously, Rush is always right. But he said, look, Donald Trump is up against so much resistance here, not only from the Democrats, but also from people in his party. And so if they're not going to cooperate with him, he's not going to get what he wants done. And that could be a big problem. But just like they did in the primaries and the election, I don't think anybody should discount the president, especially Mr. Trump. He will, I think, by sheer force of will, play the game his way and get what he wants to get done.
I guess one of the fly in the ointments could be tough talk on trade leads to trade disagreements and ultimately a trade war. That is something that many analysts say could take the air out of this market.
I never believed he wanted a trade war. I think it's a negotiating ploy. I think what he's doing on trade is the right thing. These multinational, broad-based, coalition-based trade agreements, we always get the raw end of the deal on those. What he wants is fair trade and individual bilateral agreements with these countries so that one-on-one we can talk about our trade with that country and make sure both parties get the representation that they both deserve. I don't think he wants a trade war.
So, Sean, you know, I'm an investor. I got some money. I've kind of been hanging on. I don't know why, but I have, and I haven't jumped into this market yet. What do I do? Do I wait for that pullback, and is that when I jump in?
Time frame always determines what to do. If you're a long-term investor, the U.S. equity markets are a great place to put money. I would be looking at mid-caps, for example, which have always performed better in the long run than large caps. I would be also paying a lot of attention to what I paid, as I mentioned earlier. We focus on free cash flow yield with our cash cows indexes. I would much rather buy 100 high-quality companies with high free cash flow yield than buy a 1,000 stock index or a 500 stock index that has a whole bunch of names in there that really aren't worth investing in. So know what you own is a big thing, and don't overpay. 15, 16 times for GCow and 15 to 16 times for cows, as an example, is a reasonable price to pay relative to where the overall market is at this point.
Sean O'Hara, thank you so much for joining us. We've got